America's stock market is now worth over 220% of U.S. GDP, the highest in history. Retail investor borrowing on Robinhood is up 153% this year. Corporate debt issuance is near 2021 peak levels. That is the backdrop for what The Economist calls the seven deadly sins of corporate exuberance, and they are all flashing red first, crypto lust. Corporate America went from mocking Bitcoin to minting stablecoins. Strategy owns nearly $70 billion of Bitcoin, funded by constant debt and equity raises. More than 100 companies have copied this leveraged crypto treasury model. Second, retail envy. Meme stock energy is back. Tesla's $1 trillion Elon Musk pay package passed because of retail voters. American Eagle jumped 70% after one Sydney Sweeney ad. SPACs are returning with 150-plus listings expected this year. Third, circularity. NVIDIA is investing in companies that buy NVIDIA chips to build models that need NVIDIA chips. Up to $100 billion is flowing from NVIDIA to OpenAI, while OpenAI buys chips and takes stakes in its suppliers and rivals. Fourth, a wave of mega deals. The biggest railway merger ever, the biggest data center deal ever, and a $50 billion Kimberly-Clark takeover of Kenvue. Fifth, debt gluttony. Meta sold $30 billion in bonds for data centers. Another $27 billion sits off its balance sheet. Private credit is exploding with exotic structures that blur the line between debt and equity. Sixth, patriotic posturing. JP Morgan pledged $1.5 trillion for resilience. The U.S. government owns pieces of U.S. Steel, 10% of Intel, and stakes in mining firms. And finally, fraud. A spark plug maker went bankrupt after borrowing $10 billion and is now accused of fraud. Blue Owl is down over 40%. Private credit funds are wobbling. Markets still look calm, but Strategy's Bitcoin premium has collapsed to around 20%. Credit cracks are forming, and AI spending may not pay off fast enough. When this bubble pops, the financial engineers driving it might be the ones who set off the chain reaction.